Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So, the price of oil has just surged to the highest level of 2023, and this is as Russia and OPEC Plus have announced new cuts. We don't know exactly how much those cuts are going to be yet, but they're coming this week, and already the oil price is surging. Now, this has tremendous implications for inflation, for the economy in general, and also for the price of the precious metals. Of course, petroleum is basically the lifeblood of any modern economy, and so it will have a significant impact on many facets of the economy, including the price of silver. And in today's video, we're going to talk about these cuts. We're going to talk about what they mean, how this may affect inflation moving forward, what we're on the verge of here, and also we've got some updates regarding the labor market, the U.S. economy, the debt and the deficits, and of course, stick around to the end because we're going to take a look at the price chart of silver. Now, don't forget, if you're doing some stacking, check out today's video sponsor, sdbullion.com. You can check them out with the link down in the description right now. New customers can get gold or silver at spot by visiting sdbullion.com/new. And I actually just picked up some new gold and silver from SD Bullion. Excuse me. This is a quarter ounce gold Year of the Rabbit Perth Mint piece that I just picked up. SD Bullion had a sale on this, and I figured good time to get my hands on some more gold because, my stack tends to lean a little heavily towards silver, so it's always good to mix it up a little bit. Also, picked up one of these. This is pretty cool. This is a Sword of Truth round. I don't know if anybody else picked one of these up. I think SD Bullion still has the deal going on where you can get one of those at spot. First coin at spot. So let's get right into this story. Russia and OPEC Plus are going to be unveiling new supply cuts this week. And already, I'll pull up the price chart of crude oil here. Look at it on a year-to-date basis. You can see that we are at the highest level of 2023. Now, this is critically important when we're talking about inflation because a significant portion of the disinflation trend that we've heard so much about from Jerome Powell over at the Federal Reserve and also from the administration, taking credit for successfully waging this fight against inflation, a lot of it has to do with the fact that the price of oil has come down off of the highs from last year. You can see, if we zoom it out to 1 year, that we are now approaching the levels that we were at towards the end of 2022, the very high levels which had resulted in a very high headline CPI number. If you take a look at this chart, this is from the last BLS inflation report. So this is for July. You can see that we're already beginning to see a slight tick back up in the headline CPI. That's the inflation that includes the food and energy, whereas headline CPI, or I'm sorry, core CPI, it's that red line there. Even though it has continued to tick down slightly, it is still way, way above the Fed's 2% target. So all of this really fairly ominous for the U.S. economy because, any chance of the Fed reversing course, cutting rates, all of that is sort of predicated upon inflation declining. And I believe that we're on the verge of seeing exactly the opposite of that. Of course, the massive deficits that Washington is running don't help the inflation problem. We'll talk a little bit about that in just a moment. And I wanted to comment briefly a bit more about this production cut, though, because it's very notable that it's not just Russia doing these cuts, okay? It's also their OPEC Plus partners. And OPEC Plus is this kind of super oil production organization. It's OPEC, all the Gulf nations led by Saudi Arabia, but also it includes Russia, the world's second largest exporter of energy. And so this is indicative of deeper relations and deeper cooperation between Saudi Arabia and Russia. And of course, we have the whole petrodollar question coming up. We're not going to get too into that today, but this just shows that Saudi Arabia and Russia and the BRICS organization are collaborating in a very significant way. Now, this news that broke, it was as Alexander Novak, that's Vladimir Putin's point man on oil, noted at a televised meeting that he had agreed with OPEC Plus partners to reduce the supply of oil to world markets. But they haven't released the parameters of it yet. That's going to be coming this week. So it is very possible that if these cuts are deeper than markets are anticipating, we could see an even bigger move up in oil later this week. And of course, as oil rises, then inflation will move up. We got Fargate in the chat here saying, I see no reduction in inflation every time I eat out. It's a small portion. Yeah. And, the CPI numbers, they do understate inflation. There's no doubt about that. But even those numbers that understate inflation, if oil surges, will be heading much higher. And that means that the U.S. consumer, who is nearly tapped out, is going to be under significant pressure. Very possible we could see an impact on GDP, although, not probably the official numbers, because I believe at this point that most of the economic numbers that get released are just cooked. They're just cooked. And if people really knew the truth, then the dollar would be in significant trouble. We would have a very big problem here, which we do have. It's just, not really evident to everybody quite yet. But a surging price of oil could be the straw that broke the camel's back for this economy. And so this is something that we really need to keep an eye on. Russia noted that it would be cutting exports by 500,000 barrels per day. That was in August, and 300,000 barrels in September. But now those cuts may be extended into October. And also, Saudi Arabia, who has voluntarily cut 1 million barrels per day of production, their energy minister said that those cuts could be extended or extended and deepened. So that is very significant indeed. If we see further cuts, there is going to be a much higher price of oil, and that is going to make inflation move up. Now, that could actually be bad for the price of silver in the short term, which is kind of an odd dynamic. But the thing is that these markets, they're all driven by, the anticipation of what the Fed is going to do next. If we see inflation surge, investors are going to believe that the Fed is going to keep at it for longer. I don't necessarily agree with that viewpoint. I think they'll keep at it until something breaks, but sky-high interest rates, not really sky-high by historical standards, but when you've got the level of debt that we have in this country, $32+ trillion in national debt, the interest costs on which are surging in this environment of high interest. Also, consumers now with $1 trillion plus in credit card debt, and according to a recent survey, I saw 51% of U.S. credit card holders now roll the balance over, and they are paying the highest credit card interest rates on record. So, you do the math on that. If inflation goes up because of oil and the Fed has to crank rates up, what is that going to do to the U.S. consumer? What is it going to do to the U.S. Treasury, who is now paying almost $1 trillion annually in interest on the national debt? Well, that number is going to go up even bigger. The interest on the debt could very well become the biggest item on the national budget, and that is not sustainable. I don't think I need to explain that to anybody. This is an article from the Washington Post. Now, it's not the most unbiased media outlet, but everything they're saying in this article is just numbers. U.S. deficit explodes even as economy grows. And I thought that this had some really good visuals I wanted to share with you. It just outlines the deficits here on an annual basis. And you can see that we had, huge deficits in 2020 and 2021. So all the bailouts, all of the stimulus, all of the free money sent out to everybody. Where did inflation come? Well, come from. This is it. This is it, folks. It's these enormous deficits. And then remember last year, got the deficit down to $1 trillion, which is still outrageous. still incredibly high. But remember the president taking all this credit saying, I've lowered the deficit by this tremendous amount. He didn't mention that, the deficit had soared as a result of the pandemic response prior to him bringing that down. But now, look what's going on. Ostensibly, we have a strong economy. We don't have any, major crisis going on at the current time. Although, I would kind of beg to differ with that. We have a giant debt crisis that's going on, and it's stagflation crisis and a crisis of exploding deficits, obviously. But, you don't hear the president taking credit for this, even though he managed to bring it down in 2022. Look at what's going on here. And, for all this talk of a strong U.S. economy, what is driving that strong U.S. economy? Well, you're looking at it, right? This massive deficit spending. And the Fed and the Treasury here and the federal government, they're really working at counter purposes because as the Fed increases the federal funds rate and interest rates to try to bring down inflation, the Treasury is selling all of this enormous debt onto the market, and the federal government is running these enormous deficits, which is highly inflationary. So, it's no wonder that we don't see inflation getting down to the 2% target that the Fed has set. How's that going to wind up? Well, I don't know. I mean, I think one thing that we could see is maybe the Fed will adjust their inflation target, move it up from 2% to 3% or 4%. I mean, who knows? Recalculate how the CPI moves. I mean, they are holding off on doing that, I think, because they understand what a watershed moment that'll be. If the Fed moves its inflation target to 3%, folks, or 4%, I mean, look at what's going to happen to the price of gold and silver. They're going to explode. That is a forecast I am perfectly happy putting out there. Or if the Fed simply has to reverse course, and begin cutting rates, we're going to see the price of the precious metals explode. And I do think that that's what we're headed towards. And higher inflation and higher oil prices are just going to accelerate that process. Now, this is something I wanted to comment on. We got the jobs numbers on Friday, and everybody says, "Oh, look at this great jobs number. We added 187,000 jobs. I'm sure that will be downwardly revised." But you have the president taking credit for this. The strongest job creating periods after jobs report. And listen, no matter what happens in this economy, the powers that be are always going to try to put a big smiley face on it. They're going to try to look at it through rose-colored glasses. I've mentioned before that when inflation runs out of control, I guarantee you that they'll be, talking up the wealth effect and saying how great it is that everybody can pay off their mortgage and their credit card debt and devalued currency, and how debtors are huge beneficiaries of massive inflation. I mean, that will be the line. I don't know when that'll come, maybe in a year, maybe in 5 years, but you will hear politicians and the mainstream financial media singing the praises of high inflation and, looking at the silver linings on that. I really do think that is coming. This is an article from Zero Hedge. Now, I like Zero Hedge. I try to take everything that they say with a grain of salt because it is a bit alarmist sometimes. But this piece I thought was good. Another downward revision. BLS confirms U.S. payrolls at least 306,000 lower than previously reported. And in this graphic, they point out that every single month, the jobs numbers have been downwardly revised. So if you look at that blue number, that's the original report, and then they get revised, and then they get a re-revision. And if you look at the re-revision numbers, they're always lower than the original reports. Isn't that interesting? You'd think that sometimes maybe they would get it wrong the other way, right? But no, they always overstate the number of jobs. So how much can you really trust these jobs numbers? I think that, not very much is the answer to that question. If you want a short answer, the jobs numbers are likely cooked just like the CPI and the various other government statistics that come out. But truthfully, that is an opportunity to the extent that any investors take that stuff at face value, and many do. It's an opportunity when those cooked numbers put downward pressure on the price of hard assets like gold and silver, and they allow us stackers to accumulate them at lower prices. I always say manipulation of the paper markets and manipulation of economic data, you shouldn't look at that and get frustrated. You should look at it and understand that it's not a sustainable process. Yes, it can go on for a long time, obviously, but it's just allowing stackers and people who are awake and getting their hands on hard assets to do it at a lower price, an artificially low price. And, that is in large part why I think the precious metals are so cheap. It's also why you see things like a 200 million plus ounce deficit in the silver market last year, because prices are so low. There's no incentive for miners to go out there and dig more of the stuff out of the ground, and yet industrial consumption keeps chugging along, and pretty soon the above ground available supply of silver will be depleted because of artificially low prices. I mean, you get the idea here of why any kind of price suppression is not sustainable. It might be sustainable if you were talking about maybe even gold. I mean, gold is a very liquid market. There is a long history of manipulation there. Some guy in London setting the price every day. We know that JP Morgan, their traders have been convicted for spoofing the gold market. And maybe you can do that in gold, in an asset that all these, central banks hold and kind of control. But silver is another story. Silver is a much smaller market, and silver actually gets consumed if you don't dig it out of the ground. Most of the gold that we ever dug out of the ground throughout human history, it's still around. I mean, this gold right here, yeah, maybe it was just mined or maybe it was recycled. Maybe the Romans dug this up. Maybe it was dug up in Peru. I have no idea where the gold that's in this coin came from because most of the gold that has ever been dug out of the ground is still around. But most of the silver that has been mined has been consumed, buried in landfills, used up. I mean, you can't really use up an elemental metal, but you can disperse it in such a way that it's not recoverable in any kind of economic manner. And that is what is going on in the silver market. So, on that note, let's take a look here at the chart of the price of silver because I want to comment on this kind of in light of the other stories that we have just looked at. Now, this is a chart that I've kind of showed everybody. I've actually got TradingView pulled up on my tablet here so you can see this. Yeah, Mike P says, if you are not early, you are late. And that's exactly right. And I think if you're stacking silver right now, you are early to the party. But once it explodes and people actually become, interested in this very unloved asset, then it will be too late to acquire the real thing, the physical, tangible metal. Maybe you'll be able to get some SLV or something, but good luck with that. So you got this downward trend line on the long-term chart of silver that you can see right here, going back to the 2011 high all the way down. And I'm going to zoom this in here so we can take a look at where we're at. And we're kind of butting up against that. And you can also see we've got this cup and handle formation here. I don't know, some people don't seem to really care for the technical analysis, but I think this is important. Now, if we get some kind of a crisis, a Fed reversal, any number of triggers could send the price of silver higher from here. And if it breaks above this trend line, I do think that we will see perhaps even new all-time highs. However, you notice that this is a channel here, and it may, if we see like a surging inflation, the Fed toughening up, cranking up rates even higher, we might see this touch the downward end of this channel here, and that would bring us down to about $16 or so in the paper markets. Now, would you be able to buy physical metal in that event for that price? I doubt it. I think premiums would soar because when uncertainty and crises present themselves, there is a lot of demand for physical metal, but it might provide a buying opportunity. That's why I'm buying kind of small incremental purchases like this quarter ounce of gold that I just picked up. Because, I want to have some powder dry in case we do get some kind of a systemic collapse, some kind of a deflationary downturn before the Fed unleashes the next round of stimulus. Now, I don't think they're going to let everything collapse without trying to save it with the printing press, but, it could get bad. I mean, we've got a tremendous amount of debt. We have absolutely an eviscerated economy. Manufacturing is leaving. We've got all these service sector jobs, low-level service sector jobs. You got consumers who are obviously being strained by the high inflation, which is about to get worse. That's why we've got $1 trillion in credit card debt. That's why we've got the highest level of consumers rolling over credit card balances since they began tracking that metric. For the first time ever, it's more than half of U.S. credit card holders are leaving a balance on that $1 trillion of credit card debt. So, and the average rate is something like 20%. It's the highest on record in terms of credit card debt. So, this economy is not as strong as they will tell you. Like I said, they're always going to tell you it's a strong economy. There is literally no data point that they won't spin. Nobody is being honest with the American people here. And that's a shame because there is some time to get prepared. I don't think you should be scared of this economic crisis which we are facing. I just think you got to get prepared. Don't be scared. Get prepared. That's the most important thing. And part of that is getting into hard assets like gold and silver. Part of it is getting out of credit card debt or any kind of high interest consumer debt that you have. Trimming the fat, saving some fiat currency, saving some dollars, saving some hard money. Getting yourself economically resilient because listen. The economy is cyclical, right? I mean, if we see the price of silver blow up, if we see major inflation in this country, if we see some kind of a deflationary collapse, ultimately we're going to be forced to return to some kind of free market principles, or we'll just languish. But I do think that ultimately markets will win out. Maybe we'll get some kind of a debt reset. I have no idea. I do think that hard assets will be a good way to carry over wealth into the next paradigm. And I do think that for those who are prepared and who are not, in up to their eyeballs in credit card debt and paying massive levels of interest, there will be economic opportunities. But right now we are in the winter. We're in the fourth turning, as Strauss and Howe would say. Anybody who's read The Fourth Turning or any of their, generational theory understands that, about every 80 years or so, we go through this major societal upheaval. You go back 80 years, you got World War II. 80 years before that, you got the Civil War. 80 years before that, you got the American Revolution. And now, we're on the verge of World War III, basically. And we are facing a massive economic crisis. Will the U.S. rally to the, occasion? Well, I hope so. But there's going to be significant pain before we get to the other side. I think that's guaranteed. The kind of debt that we have in this country, there is no way to pay it off unless you just have massive austerity. You let the economy collapse. You slash benefits, you slash entitlements. And I know everybody out there is going to tell me Social Security is not an entitlement. Okay, maybe you need to slash whatever you want to call Social Security. I mean, entitlement program is just a program in which somebody is entitled to a government payment. So Social Security does kind of fall into that category. And those are the three big ones, the Social Security, Medicare, and defense. Those are the big budget items. However, interest is soon replacing one of those. Interest may be the highest one on the budget very soon. But listen, when you see things like the price of oil surging, and you see inflation surging and you see interest rates surging, we're heading for stagflation. And so it is time, like I said, to get prepared. But let me know what you think in the comments down below, folks, about this development. What do you think is going to happen to the price of oil? What kind of effect will it have on this global economy? Two Brother Stacken says, give us our Social Security insurance payments back and they can keep it. Yeah, I think it would be much better, certainly, if you could just opt out of Social Security. That would be my option. And listen, I know if you are a Social Security recipient, you paid into it. I get it. I think maybe, what would really be a good policy would be some kind of a means tested reduction in Social Security. Like, Warren Buffett doesn't need to be collecting Social Security checks, if you ask me. But who knows? Is now a good time to buy silver or wait a bit? Chauncey Hart asks. And thank you for the super chat there, Chauncey. Yeah, I mean, I think it's a good time to average into silver. I wouldn't go all in at this point because, like I said, we could see a return to the downward end of this channel. I would say that would be a really great time to buy some silver if we go down to 18 or 16 bucks. None of this is financial advice, by the way, folks. I'm just a guy on YouTube, not a financial advisor. Don't go by what I'm saying. But yeah, I just bought some silver. I picked up this. And then more importantly, I got a 1/4 ounce of gold. So an ounce of silver, 1/4 ounce of gold, small purchases, small stacking, incremental. I like the dollar cost average. There's not really a huge dip right now. So that's when I really like to buy a lot, is if you get a big price dip. But that's not guaranteed. If we break through this downward resistance line and we complete this cup and handle pattern, which is forming on the long-term silver price chart, there may not be any more big dips. We're right up against that line there. Now, I will say that higher inflation actually tends to make me think maybe we will see a revision downward. And silver has been bouncing around inside of this downward channel for some time now. But once it breaks out, I don't think it's going to be heading back down anytime soon. And, if that happens and you haven't accumulated any hard assets, you're probably going to wish that you had. That's all I have to say. Again, it's not financial advice. And it's not what we should do necessarily. It's not for everybody. Like, for example, if you've got a bunch of credit card debt and you're paying a high interest rate on that, I would focus on getting that paid off. And again, not financial advice, but I do think that getting out of consumer debt should be a priority for everybody. And then, surplus, if you're, say, saving some cash, yes, it's nice. You can save some cash and get like 4 or 5% now if you have short-term treasuries or a high-yield savings account. But I think that saving some real money is also good because the purchasing power of those dollars, I think, are losing. I think they're losing their purchasing power faster than any kind of appreciation due to the higher interest rate. Now, it's certainly better than getting 0%. I don't know. Chauncey Hart says, P.S. I'm already well stocked, but thinking about buying a large amount of Constitutional. Thinking about waiting until October, November, though. Yeah. Constitutional silver is great. I think that SD Bullion right now has some $half on sale. If anybody is in the mood for some junk silver, they've got Constitutional silver. I'm trying to find it right now, so bear with me. But they've got $half on sale for some of the lowest premiums I've seen. There's any quantity pricing. And you can pick up a roll for $202.49 right now if you pay with cash. So about 20 times face value. That's pretty good. And if you remember what happened in March when the supply got so tight and we were looking at buybacks where a lot of the dealers were paying a high premium for people who were selling back constitutional, the half dollars commanded a higher premium than the quarters and the dimes. So these, I think, when you can get them at a cheaper price than the other forms of junk silver, these are probably the things to stack. So yeah, constitutional silver is awesome. You know, they're not making it anymore. I think probably if we see premiums on physical products explode, the premiums on junk silver will eclipse everything else, maybe with the exception of U.S. Silver Eagles because the mint kind of, won't make enough of those. So the supply is short, but they're never making any more junk silver. So I do think that stacking constitutional or junk silver, whatever you want to call it, is always a good idea. Again, not advice. So let me know what you think in the comments down below. Anybody stacking? What are you stacking right now? You stacking gold? You stacking silver? You stacking constitutional? Stacking rounds? You stacking Aztec calendars? What do you got? I'd like to hear it. Let me know what you think in the comments down below. And thanks for watching, everybody. Stay safe out there and happy stacking. And I will catch you next time. Smart Silver Stacker out.